Live from Bloomberg's world headquarters in New York City, we're tracking the key players, the major moves, and the capital flows shaping global markets. This is Bloomberg Deals.
Welcome to another episode of Bloomberg Deals, the only show dedicated to corporate action reshaping markets. On today's show, Bank of America extending a new credit line to OpenAI. Bloomberg reporting that the bank had a change of heart after factoring in a potential massive IPO. Plus, in this week's investment committee, we dive into the M&A landscape of sports and media. Grace Lee of Alix Partners and Jessica Reif-Ehrlich of Bank of America Securities. And Blue Owl taking a stake in the Cleveland Cavaliers. That's just the latest in several positions the firm owns in NBA teams. And we will get more on that just in a little bit. But first, let's get to today's big deal. The chip startup SambaNova Systems has raised $1 billion at an $11 billion valuation. It's the latest example of investors betting on rising demand for infrastructure tied to AI. Bloomberg Deals reporter Ryan Gould broke this story, and he joins us now. Ryan, great to see you. What are the details? Yeah, so SambaNova, as we've spoken about on this program many times already, is a foremost player in and around AI inference. Inference being, decoding, as it's known in the industry, the query that's put into the existing model, like OpenAI's ChatGPT or Anthropic's Claude. This is a company that really is trying to sort of lower the cost. Their focus is on lowering the cost per token, as it's known, by deploying the specialized chip, which works in tandem with NVIDIA's sort of existing chips in those data centers across the world that we all know well. SambaNova is one of many players, I should add, that is trying to do this technology, but this $11 billion valuation is clearly a sign of strength in and around its business model, clearly a sign that there's plenty more to come with General Atlantic leading the round. Right, plenty of private equity backing there. So it underscores, one, you want cheaper access to inference, but two, just the demand for chips. I mean, Broadcom, Apple, we're learning now more details of that deal and just how large it is. Yeah, we were joking actually just before we came on air that, Broadcom was once upon a time known for doing these big M&A deals like VMware, the tune of $60 billion. Now they're doing chip partnerships, which, to the tune of $30 billion with Apple, which, you see Broadcom shares rising this morning on those headlines. I think what that really is about for both companies is a sign that the administration, or a sign to the administration, that they are listening to Trump's Made in America agenda. I think that's really important when you think about what Apple is trying to achieve as far as its own chip-making ambitions go in the US. And I should add that both companies have been sort of strong partners for many, many years. Broadcom has for a long time supplied Apple with chips in and around sort of advanced radio, wireless, Wi-Fi, and so on. So this is kind of more of the same, and I think Broadcom and Apple investors should both be pleased with this development. Okay, you mentioned we were talking. I should also bring in Liana Baker. I know you're working on the SambaNova story as well, along with another scoop, just sticking with AI. You and the team reporting that Bank of America now extending a credit line to OpenAI, something that they hadn't done before. Why this change in heart, Liana? So we've been tracking this. In 2024, OpenAI revealed this credit facility, and all of Bank of America's competitors were on there for a $4 billion credit facility, and we just didn't see Bank of America. So a few years later, they kind of did a 180, and they decided, okay, this is a no-brainer. We need to back OpenAI's credit because that will ensure a spot on the IPO. When will OpenAI's IPO happen? It's unclear. Could be this year, could be next year, but it's something that Bank of America can't miss out on. Remember, they have a huge wealth business, tons of clients that would be clamoring for this. I think the SpaceX IPO was a good example of just these once-in-a-lifetime IPOs is hard to get a piece of. So this will just help Bank of America get a better spot when OpenAI should go public. And remember, they have filed confidentially already. All right, and we'll see when that actually happens. But that is a problem, right, Liana? Yes, Bank of America extends this line, but OpenAI, the reporting does suggest that it seems like they're on a delayed timeline. They are, and they're, not profitable, and that was one of the reasons that Bank of America needed more time to do due diligence before deciding to sort of jump into this credit facility. All right, Liana, Ryan, thank you both so much for joining. That's Bloomberg's Liana Baker and Ryan Gould. Elsewhere, South Korea's SK Hynix is moving ahead with its U.S. listing this week on Friday, which will be the biggest ever by a foreign company. Scarlett Fu has more.
Danny, Korean memory chip maker SK Hynix plowing ahead with its $28 billion listing on the NASDAQ on Friday. And Bloomberg has learned that its $28 billion offering of American depository receipts is multiple times oversubscribed ahead of pricing tomorrow. While SK Hynix is capitalizing on this tsunami of demand for high bandwidth memory, thanks to the AI boom, this week has seen a sharp rotation away from chip stocks across global markets. We've seen declines in SK Hynix and its rival Samsung Electronics in Korea, dragging that country's benchmark Kospi index into a bear market, a technical bear market. Even so, the Kospi does remain the best performing market year to date around the globe, up 72% in local currency terms. And for SK Hynix, it's really all about the long term, with a U.S. listing opening up a new fundraising channel as it gets ready to build new chip-making plants to increase capacity. Bailey Gifford, Coatue Management, and Situational Awareness Partners have already indicated interest in buying up to a quarter of the ADRs. And other investors looking to participate include global long-only funds and tech-focused investors. Danny?
Scarlett, thank you so much for that breakdown. Now, another set of deals we are watching. Campaigns by activist investors have hit an all-time high this year. According to a report, the number of campaigns climbed 20% during the first 6 months of the year, compared to 2025 to a record-breaking 184. Bloomberg's Matthew Monks joins us now. Matthew, we're going to have to be quick because we're about to hear from the president in any moment. So very quickly, what are we seeing? Why more activist campaigns?
Well, we're in the middle of an M&A boom, right? Naturally, M&A and activism go hand in hand because an M&A outcome is the best thing that an activist could help for. What's striking about what's going on right now, though, is while campaigns are up, proxy battles are actually down, which kind of tells us that activism has become like a year-round pressure campaign rather than just a big boardroom showdown and vote.
All right, Matthew, thank you so much for this fantastic coverage. Matt Monks there from our deals team with the latest on activism. Let's get back to the deal-making universe, though. This week, Paul Weiss is advising on two critical deals that were announced. First, there was the Honeywell spin-off Solstice buying Element Solutions for $14.5 billion. The second, Vertex Pharmaceuticals' acquisition of Crinetics for $10 billion. That was their biggest acquisition ever. Joining us is the lead advisor on that Vertex deal. It is Krishna Veeraraghavan, Global Co-Head of M&A at Paul Weiss. Krishna, thank you for joining, and I'm sure it's been a really busy week for you.
Thanks for having me. Yeah,
I remember
it's exciting.
we were talking a couple months ago, and basically it was this idea that, okay, healthcare has kind of gotten off to this slow start, but you had mentioned, yeah, but the conversations have been really robust. Is it fair to say that that slow start has now fully picked up steam?
Absolutely. I think 2026 is off to a torrid pace in biotech, both M&A and the equity markets. Thus far this year, there have been more deals over $1 billion in 2025 combined. So it's exciting, and I think there are a couple of reasons for that. I think one, as we talked about before, you have these large pharmaceutical companies looking at patent cliffs coming up, and by 2030, I think there's like $300 billion coming off. So there's a need to be aggressive to go out, find growth, and they're being rewarded for that as well. And then you're also seeing a new class of buyers come in. These are mid-cap companies that were targets before that have really reached escape velocity and now are looking around. So there's a whole new universe of buyers out there, and I think that's really driving the pace of activity.
Does that mean that activity isn't just happening in large cap, that you are seeing smaller deals lower down on the food chain also getting achieved? Because for M&A more broadly, it has kind of been on the upper end of the table where it's been occurring.
So there's definitely scale transactions happening. There have been 4 $10 billion deals in the past 3 or 4 months, which is amazing. But it's really that smaller segment that you mentioned that's happening, where you're seeing these mid-cap companies who are going on buying $1 billion, $2 billion companies. And that has also extended to the private markets. That's a big change. We're seeing a huge number of deals in private transactions. So those smaller deals are driving activity in addition to the big deals.
How come it can happen in biotech, but it feels like it can't happen elsewhere, specifically for private equity? Yes, some exits are starting to happen, but it still feels largely like a sector that's been gummed up, I guess, say for healthcare and biotech right now. I think
it's a confluence of things. I think one, it's a growth area. Biotech, if you look around the world in terms of the blockbuster drugs, the potential, and it's global. China is very active, the US is very active. So it's a place where you're seeing investors want to put capital. M&A is helping that. And then you've also seen a resurgence in the equity markets generally. The XBI is up 80% this year, right? So you're seeing capital coming back in both into public companies and also private companies too. So it's a really virtuous cycle. You have M&A, people want to invest. You have more IPOs happening. There are really great receptions on these IPOs. So it's a really, really nice space now. And I'd also think, a year ago, if we were talking, the sentiment was a little bit negative. We were worried about the FDA, MFNs, pricing, tariffs, and I think those sentiments have largely flipped. And there's a desire to go out and really do deals. And these buyers, most importantly, are being rewarded for the transactions by their investors.
Just speaking of the regulatory environment, President Trump, speaking from Turkey moments ago, was calling out kind of the list of companies that have invested more in the U.S. And one of them he mentioned was Merck. And I wonder if there is sort of this appetite, at least support from regulators, that yes, deals are getting done, but ones that are very America-centric. Do you see that sort of environment emerging?
I do. I think, look, the U.S. Biotech ecosystem is amazing. It's great to see these world-class companies like Merck investing back in the U.S. We have the best talent around the world. We have the best system. But there's real competition around the world, too. China has amazing innovation. Assets there are being sought after as well. So I think the bottom line is I think that's very great for the patients around the world. So I think it's great to see in the U.S., but I expect it to happen around globally as well.
Are cross-border deals also being accepted as widely by this administration, or is there a little bit of reticence?
No, I think the regulatory environment is very hospitable to transactions. You're seeing a lot of the European companies investing in the U.S. a lot. Japan has been very active. So I think there's definitely no slowdown from a cross-border perspective.
You mentioned that public markets have been very supportive. And I wonder if on a wider scale for M&A in general, we've seen that start to flip, and specifically a lot of volatility around AI-related names. Obviously, the deal environment has been really robust for AI-type companies. Yep. This stretch that we're going through, what does it take to start to get companies to back off, to get nerves because of what public markets are doing? And are we anywhere near that?
I think it's going to take some very significant pullback to have that happen, because I think the momentum for AI, even with this volatility that we're seeing, is so significant. And everyone is seeing the implications for AI day to day, but long-term businesses. And I think there's just a genuine concern that if you're not investing in AI, you're going to be left behind. So will we have some pullbacks and slowdowns here and there? Yes, but I expect AI to really continue driving a lot of activity in the space.
What about the funding for AI? These stories continue to crop up. Yes, they can still tap debt markets, but you get someone like an Amazon yesterday tap the debt market and get like full reception, but only 1.6 times oversubscribed, and it's usually something like 4 times. Are these companies having a harder time finding the capital that they need, or are capital markets still wide open for them?
I think capital markets are very good for them, and this is a place where I think private equity has a huge place to play in terms of hybrid capital solutions, investing, financing. We've seen a lot of that with data center deals and other collaborations going on. So I expect there's going to be lots of capital that is going to be seeking to invest in that. And you're right, they're very capital intensive, and at some point investors are going to expect to see a return. But right now, I think companies are being penalized for not investing versus the overspending.
Okay, how much does that change what you do? Because you mentioned something, the way that these deals often take shape, it's not like company A buys company B. It's that they have a collaboration, they have an agreement, like an acqui-hire kind of thing is occurring. The type of deals feels very different. Has that changed a lot with what you're doing and how you're working with these tech companies?
I think so. I think the acqui-hires are, they've been around different spaces before. That is a real emerging trend here, because these companies are looking not just at the platform they're buying, but that talent, and they want to bring them in and then have them sit at the companies and then build out what's happening. So those parts of the deal, the people part, I think have become the key parts of the AI deals. But in terms of cleaning up partnerships, we see that across industries. The biotech space, a lot of the transactions we're talking about are partnerships that result in deals. So, a partnership or an investment a lot of times is the first step towards a transaction.
Is that new, or this has been happening throughout?
No, I think that's been happening for a long time. That's been a continuing trend. And, whenever someone's entered into a partnership, we always expect that party is probably the most natural buyer for the asset.
Okay, so we've had a really robust first half of the year. Deal making and specifically biotech. Does it slow down?
I don't think so. At least based on sort of what we're seeing, our pipeline. I don't think it's going to slow down. I think there is really positive momentum. And like I said, I think the sentiment in the C-suite is going out and doing transactions. And I think investors expect it. So I think it's going to continue.
I'm going to ask this with the full knowledge that this didn't occur in the first half of the year, but geopolitics. I mean, it's back in the headlines, market volatility, threats from the president. Again, it obviously didn't hamper deal-making activity in the first half, so I almost feel silly asking this, but is there a world where it does slow down deal activity?
I never say never, but the activity levels have remained constant, notwithstanding different events happening around the world, take what's happening in the Middle East and, issues with China. I think it would take something very significant to really slow down the pace of activity now. So knock on wood, it won't happen. But my prediction is a really strong second half of 2026.
Any risks you are worried about? What happens in the midterms if Congress flips? Does that?
We're always watching that. I think it's hard to assess sort of the impact of that quite yet. But obviously, if there is a change in Congress or the Senate, we'll be watching carefully.
All right, Krishna, we're going to have to end it there. Thank you so much for joining. Always a pleasure to get your view. Please come back again. Krishna, Veeraraghavan with Paul Weiss. So President Trump making headlines as he speaks at the NATO meeting in Turkey. Even after the war, though, upended the regional landscape. The family office of the President of the United Arab Emirates have shown unwavering readiness to make deals. That president's firm, AC Limited, is headquartered in Dubai, and it's believed to manage assets worth tens of billions of dollars and has a sprawling portfolio ranging from tech startups to top bio funds. That story is the latest big take by Bloomberg News, and it brings us to our alternative view, the Abu Dhabi family office that's become a global force in deal making. Ben Bardenstein helped write the story, and he joins us now from London. Ben, many people would look at this and say it is quite remarkable, given the investment that needs to happen in the country in a post-war or still war landscape. Maybe you would see some of the big players pull back. Why haven't they?
Well, Danny, the UAE investment firms in general have a great appetite for deals. That's the case across the sovereign wealth funds, which oversee more than $2 trillion in assets, but also the royal private offices, including AC Limited, which we highlighted. They're very much ready to deploy. And as we highlighted in our piece, sit on tens of billions of dollars that they're ready to deploy.
So what kind of deals have they been doing, Ben? What is this money chasing?
They've really invested across asset classes. I mean, we're looking at private equity, credit, tech to listed equities, and really across all regions in the world. One of the things that we noted, and again, this is not unique to AC Limited, but also the case for some of the sovereign wealth funds in the UAE, is a bit of a greater focus on the defense sector in the aftermath of the Iran war. This has been a kind of critical national security priority for the UAE after facing a barrage of attacks from Tehran.
Just want to underscore that point, that they're still investing in private capital, because this is a sector that had seen pushback from retail. When it comes to them investing in this sector, I mean, has there been any sort of push and pull, Ben? Because another part of the story is that LPs want returns, and they haven't necessarily got them. Why is the allocation to private markets still so robust?
I mean, I have to say we have less clarity perhaps on some of the day-to-day machinations of the firm. But I would say that AC Limited has demonstrated over the course of its history, being in the market for more than a decade, that they're willing to invest across pretty much any cycle of the market, unlike maybe some of their peers.
Can you give us a landscape of how their peers are behaving at this moment?
I mean, I guess what I would say in contrast to some of the sovereign wealth funds in the region, one thing that makes AC Limited unique is that they have greater flexibility. They have kind of less reporting expectations or obligations than some of their wealth fund peers in the Gulf. And yeah, they're just able to act in sort of a nimbler way. They have a slimmer staff, but still obviously have hefty assets under management, where they're able to deploy kind of at rapid speed.
All right, Ben, we're going to leave it there. Thank you so much for bringing us this story. Really fantastic. I recommend everyone go read it on Big Take Go on your Bloomberg terminal. That's Bloomberg's Ben Bartenstein. Now, the sports world is gripped by World Cup fever, but the M&A space is also focused on sports media. Bloomberg senior deals reporter Michelle Davis is at the annual Sun Valley Conference in Idaho. She spoke with Bain Capital senior advisory partner Steve Pagliuca about the opportunities he sees in the space.
Number one watch programming, globally, and there's a battle between old media and new media, the Googles of the world and the NBCs of the world, to see who's going to win out. And sports is one of the most coveted properties, and that's driven the valuations way up.
And Michelle Davis now joins us from sunny Sun Valley. Michelle, a fantastic conversation. Can we just go first for some of your takeaways with Mr. Pagliuca there?
Yeah, I mean, that theme of, competition between new media and old media has been a really consistent theme this week and for the past few weeks. And a big reason, part of why that's happening is because media is just facing more competition than it has for years, and we're finally seeing media companies be emboldened to actually strike deals. And this conference in particular is one that's known for spawning mega deals. I mean, a decade ago, Comcast's acquisition of NBC Universal from GE stemmed from a secret meeting at this very conference. Just last week, Comcast announced that it's going to be separating that unit, and we already saw Comcast Brian Roberts, Mike Kavanaugh. We've seen a lot of the heavy hitters who we normally expect to see here. And what folks tell us is a lot of the value they get from this conference is really those impromptu run-ins that, you know, could lead to future deals down the road. So while the programming itself is kept under lock and key, we know that a big part of what folks are doing here and what we've already seen them do is meet with each other and talk about the future and how they can work together to kind of combat some of these competitive tensions that they're feeling.
Well, Michelle, you and I had talked about this last week. Just the spat of announcements we got over media deals has been huge, whether it be Fox and Roku, Comcast spinning out NBC Universal. Are all, I mean, I know you're saying they're talking about the long term, but for now, are all the deals done, or might we get any announcements coming out of Sun Valley?
You know, I think it's only just beginning, because a lot of folks that we talked to see or saw the Warner Brothers deal as kind of a fulcrum asset. And once Paramount announced that it was buying that, it kind of reset the chessboard a bit. With Comcast finally coming out and saying that it's going to separate its media business from cable last week, that's basically put up 2 for sale signs on both of those units. We also know Netflix had been on the hunt for a studio asset because it obviously had signed a deal to buy Warner Brothers. I don't think they're done. They're still on the hunt. And so what we're hearing from folks is that this is really the time for companies to strike these deals, and they're under even more pressure than they were before, because it's a bit of a game of musical chairs where, with Warner Brothers having been scooped up already, for example, the number of combinations is dwindling with every deal that does get announced.
Michelle, what about Netflix? Do you think they're still searching for something? Is there any chatter that maybe they want to go after another movie studio?
We hear that Netflix, continues to look at things as they come up. Netflix, of course, has said that the reason it bid for Warner Brothers was not that it had run out of ideas and not that it was really shifting its strategy or away from building, but really that it felt like an opportunity that it could not pass up. Of course, if another opportunity like that does come up, I'm sure we will see them act with the same confidence and conviction that we saw them bid on Warner Brothers with.
All right, Michelle, thank you so much for your reporting. That's Bloomberg Deals senior reporter Michelle Davis, live from Sun Valley. Let's stick with media and media deals and bring in Grace Lee, partner and co-lead of the media and entertainment practice at Alix Partners. Grace, wait, why aren't you at Sun Valley? Do you usually go?
This year, I happen to have a other conference to attend in Bay Area.
Hey, maybe that says something on its own. You're too busy even to go to Sun Valley itself. I wonder what you make of the pace of media deals that we've gotten. We were just talking about some of them with Michelle. Just recently, whether it be Fox and Roku, NBC Universal spinning out of Comcast, what you make of the pace of those deals and whether it can sustain itself.
I think the pace is quite amazing. And then there is I think I can make of 2 reasons why the pace has really picked up this year. One is a scale as a moat for the business. If we look at the capital markets willingness to pay for the scale on a premium is the highest in the recent decades. So that actually forces the company to build up their scale. And the subsequent effect of that is because of these highly levered mega mergers, some of them will have to spin off some of their assets, which will be a follow-on spin-offs and carve-outs, and then there will be a new pipeline for the deal. So the second effect, yeah.
If I can just jump in, Grace. So does that mean something like the Paramount deal, for example, with Warner Brothers, that big conglomerate now needs to spin off different assets? Is that kind of what you're leading to? And what are sort of the assets that might get cast aside?
So I cannot talk specifically about like Paramount and WBD deals, but then given the fact that it is highly levered in order to service the debt and in order to invest in a sustainable growth levers going forward, they will have to force spin out some of the assets that they find non-strategic. And then that will feed into the pipeline of the carve-out and middle market activities.
Just asking for a friend about the future of linear TV, not for my own interest, of course, but a lot of these linear TV assets, again, are getting spun off, whether it be Comcast and NBC Universal, and already before that, Versant. I mean, Versant, its public reception was to drop 18% since it listed. Grace, again, I know you can't talk about specific companies, but I wonder for that type of live programming, setting aside sports, if that's kind of the reception that you continue to expect, if that says something about the valuations of these parts of companies and maybe whether they're better served away from the parent company.
Yeah, linear asset and then the reception and the advertising dollar goes into the linear does not looking good. And I don't think, like, linear does a lot of things in order to prop up their value. But in a long term, I think the trend will continue, the cord cutting will continue. So the linear asset valuation does not looking promising in a mid to long term.
We've seen also this explosion around sports investments, whether it be sports teams, leagues, stadiums, media rights, all around it. But that media part of the ecosystem, Grace, it feels like valuations keep climbing higher and higher and higher.
Yes.
Just how competitive is the landscape? And is there a ceiling to this thing?
Well, I think for the sports, it's an interesting content because it is the strongest glue and for all the bundle of the content. And it actually bifurcates the players as haves and have-nots. What I mean by that is the big tech or new medias are willing to pay up for these global attractive leagues, whether it's the NFL or F1, right? And also, based on our experience of serving them, we know that they use a lot of their first-party data as well as AI technology to understand the uplift that these content create for their subscription revenue. Whereas for mid-tier sports, I don't think they will continue to demand high pricing going forward because they face aging population, and then their attractiveness will go down at some point.
So, Grace, you've talked about some of this idea of scale and what that's forcing with needing to spin out assets, some of the live sport opportunities. What else do you see as robust in terms of deal making in media and the sports landscape?
Yeah, one of the key drivers in the deal making in media is AI. And how the AI impacts the deal making in the media space is twofold. One is it actually props up the value of the AI, IP, and data-driven assets, whether it be ad tech or IP monetization or distribution. And also the recent activities around the gaming and interactive media is also part of the AI play because those happen to be the subsectors that is heavy with the first-party data as well as the IPs. And what it does, on the other hand, it continues to press the valuation of the studio-created content. And also, it creates a lot of uncertainties on future value of those contents.
Grace, thank you so much for joining. We're going to have to end things there. Grace Lee of Alix Partners, really appreciate your time in the midst of Sun Valley and that deal-making activity. Good luck for you for your conference that you will be attending. Just want to mention the president has just wrapped up his remarks at NATO at the conference there. Again, continuing to talk about various investments. Lockheed Martin, he says, will establish a facility in Europe on weapon making, saying we can quadruple the amount of output. And then on Iran as well, saying that he wouldn't put troops on the ground. Again, talking about oil markets too and the expectations that they would move lower. Coming up, we'll wrap up those headlines for you. This is Bloomberg Deals. The president just moments ago wrapping up his comments in Ankara, Turkey. Bloomberg's Annmarie Hordern joins us now from the room where the president just spoke moments ago. Annmarie, listening to the president, he talked about this idea that he doesn't think the war is going to start again, despite the fact he said that the ceasefire is effectively over. Where does that leave us in both conversations with Iran and the United States and any potential military action?
Well, welcome to a day in the life of covering the president. Earlier this morning, he says the ceasefire was over as far as he could understand. He called the Iranian scum and said that the regime was cuckoo. And now when he was pressed by a reporter, he said that he doesn't think it's really going to go back into hostilities that drag on. He said this is going to be a quick job. So where does that leave us right now? What is really the status of this current very fragile MOU at the moment? And it comes also on the heels of the president saying a little bit earlier before we walked into this room to discuss what happened at the NATO meeting and take questions from the press, that potentially there was a possibility, he said, that he can strike Iran this evening. So it seems that the president is keeping his options open at the moment. One thing that he was pressed on a number of times about the price of oil, the president said oil has come down. It's important to note Brent crude was actually around $72 before the Iranian conflict began. Today, we hit $80 at one point when it comes to Brent. So this is something that a lot of people obviously are tracking in the oil market, given the fact that a lot of ship owners right now are having to decide whether or not it is safe enough to transit the Strait of Hormuz.
And the president also saying that in that speech that we have an oil glut right now. Annmarie, you know these oil markets better than anybody else alongside politics. I just wonder how volatile and how closely traders are watching the president's speeches and his comments about these oil markets, and how much of that is in the back of the president's head as he makes these announcements, concerns about higher oil prices, especially as we head into the 2026 midterms.
Right. Well, a lot of analysts will look at where we are in the oil price and predict potentially where we will be in terms of ceasefire negotiations and the tit-for-tat start when it comes to talks, as well as the skirmishes we've seen in the Strait of Hormuz. I mean, look, even the IEA says potentially we can go into a glut for 2027, but that was when the MOU started. If we are going back to proper kinetic war once again, then you can see prices spike yet again. The issue right now in the Strait of Hormuz and what vessels are having to decide is, do they want to go along the Omani coast? That would have the protection from U.S. forces, but that definitely puts a target on your back when it comes to the IRGC, or traverse the strait through the middle of the Strait of Hormuz. But with that, you need Iranian approval. And then potentially that puts you in the crossfires of the United States. So it's becoming incredibly challenging right now for ship owners to go through the Strait of Hormuz. And not only that, we did see the president hit back, not just militarily, Danny, when it comes, of course, to what is going on with the strikes we saw CENTCOM announce last night, but also the Treasury Department lifted their waivers on Iranian crudes. It's going to be much harder as well for the regime to get their product to market.
Annmarie, what kind of picture and message did we come away with the U.S.'s relationship with Europe, especially as it pertains to their role in this conflict?
Well, it's definitely a family that certainly is having some fights at moments, and I think that that's been very true of the European alliance with the United States throughout Trump's entire term. I mean, you remember the start of the year, it started with Greenland, that anxiety that was really invoked upon the Europeans, especially at the World Economic Forum in Davos. Some of that came out as well here at the NATO meeting. The latest issue, obviously, Washington has right now with the European, the latest source of frustration is this president does not think the Europeans did enough. And actually, when it comes to a country like Spain that barred the U.S. from using its airspace, they were not helpful when it comes to the conflict of Iran. When it comes to defense spending, though, the president was touting that he thinks most countries are pushing to get to that 5% of GDP target, and there were deals that were announced on the sidelines. And then finally, I would say on Ukraine, there was a moment during the Zelensky bilateral meeting where the president turned to Zelensky and said, I think I'm going to give you that general license. That would be a big deal for Ukraine, as well as the NATO alliance. I spoke to the Finnish president, Alexander Stubb, yesterday, who said this would be a welcoming decision if NATO was able to get the license to produce those Patriot defense missiles in Ukraine itself. So it's a mixed picture, and I think it depends upon what the issue is, how the president of the United States and how this administration's relationship is with the European countries.
Annmarie, thank you so much for your reporting there. Annmarie Hordern, Bloomberg's chief Washington correspondent, as well as co-host of Bloomberg Surveillance. Again, just to recap, the president speaking from Ankara, saying that he does not think it's going to start again in reference to the war in Iran, saying, I think it's going to go very quickly. They hit a couple of ships, and so we hit that much harder. Again, not backing off of his threats of attacking Iran. That does it for Bloomberg Deals. To stay up to speed, subscribe to the Bloomberg Deals newsletter. Up next, more from NATO for the Balance of Power, live from Washington, D.C.